taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield live from London. Big shout out to everybody that's joining us live today, and also for everybody that is watching this on catch up as well. How are we all doing today? Everybody feeling good? Going to take a look at some charts today, so just give me a second. We'll get those bits and pieces up and ready for you. Here we go. How are we doing? Whack in first for the win this morning. Craigie boy, good to see you online. Erica, always a pleasure. Raphael, hello, mate. And Dino, love the name. Yeah, absolutely. This is live, my friend. The Koneku, brilliant name. Good morning to you too. And Geo, as well as the hundreds building up shortly to thousands of people watching this online. Really do appreciate all of you tuning in. So I wanted to kind of, as we normally do on a Monday, keep our focus here on Bitcoin. Obviously, we'll take a look at ETH as well. And I want to touch upon the traditional markets just so that we can kind of get a feel. Now, the reason I wanted to start on the 4 hour today, because as I released in the Bitcoin report last night, you can get that report for free, by the way, as well as a number of other kind of membership benefits that you can find down in the description. But for me, it was really, really clear. So I wanted to start on the 4 hour. As an intraday trader, this is kind of my high time frame. Now, we will cover the higher time frames, the weekly and the daily as well, for those of you looking to kind of swing and position trade. But this was so super clean for me. All right. Now, obviously, when we step into a weekend, right, price action, as we know, volatility goes down, the volume. The traditional markets are closed, right? So we, expect less in terms of large movements. Not always is the case, all right, but typically. So whilst we are obviously in a bearish trend here on the 4 hour, as we can see. Hey, Nip, my man, how you doing? As we can see, lower lows and lower highs, all right? So coming off of this, and we're going to cover what this is shortly as well from the higher time frame. Look, while we're delivering bearishly, while it's bearish order flow, while price is in a bearish state of delivery, then the thing for me is it becomes really, really simple with the way that I look at the markets, all right? While we're being held under bearish gaps, as we were here, yeah, the gap from these candles, then the expectation is for price to seek the next viable liquidity pool, which is resting below these lows, all right? This low here, and then obviously this low here as well. So that all plays into our targeting. So as we stepped into it today, really, really simply, Sunday, we saw the move up here into this bearish FVG. Obviously, already respected this one. Now, as long as we hold this, and this is exactly what I said in the report, as long as we don't close above this, violating it, yeah, then I expect lower price action. Now, to add an extra layer of granularity and an execution plan to that, I said, if we close below this, so we now turn that purple, meaning that that has been inverted, right? It means that it's a bullish gap that we expect to support price in the same way that we saw this bearish gap here reject price, yeah? And this bearish gap here rejects price. Well, look, while we're expecting bearish continuation here, we don't know if this is going to be the point that price finds support and continues higher, all right? So while we have this bullish gap here, we have to respect it. But when we close under it, then we look for a pullback, as I said, and we're looking for price to attack these lows, all right? Now, quite simply, now that we've got that, we're below this, this becomes a point of resistance, all right? So overhead, we can see that we're kind of stacking up some relatively strong resistance here. Now, as price has purged out this low, we can see this really long tail wick, meaning that we've seen quite a nice recovery from price here, all right? So price is coming to this low, attack the stops that are below it. People have bought those up, and now price is kind of moving higher. Typically, on this time frame, we would need to see something in the nature of this. You would want to see this high taken out, so price recover this, yeah? Use this as support, And then this is the area here that we would look to be getting interested, all right? Because I would also want to see a close over this fair value gap. The same way that we did this in a bearish nature, we would look to flip this in a bullish nature and turn this area to support, okay? So just to make people aware that there is this kind of building overhead resistance, all right? So we're going to do this slightly differently and kind of backwards rationalize this. We're now going to move out to the daily. Now, this is the current dealing range, right? So we had the reversal here, accumulation, expansion, accumulation, and then you've now got this very, very small swing failure here that could well be leading this back into a sell model, okay? If that's the case, then we expect this to be the point of reversal, or this to be the kind of area of consolidation, then expect distribution, then you look for more consolidation, all right, or accumulation, and then further distribution lower. So the way that I'm looking at this is if we take the Fibonacci from the low to the high of this being our kind of dealing range, or what would also be known as like an expansion leg, yeah? So we've got, this is the point the market broke structure here, yeah? So we purged the low, took out this high, this is the high that broke structure, show you this is the move that led to the shift in structure, and then we've moved higher. Now, I would have expected price to come and attack these highs in truth, purely because normally when you leave these failure swings, so prices come up to here, fail to kind of take this. I did kind of take this one here, but we got untapped liquidity resting here and here. Well, the worrying thing for me is that price kind of took this high here, the more local higher, with really, there must be tons of liquidity and stops resting above these, right? So that's been swept. Again, you know, you will kind of get used to me sounding a little bit like a broken record, but we have this fair value gap inversion here. We then cause this bearish gap in here, sorry, which we retest. Price sells off where to? The nearest point of liquidity. So what are we now looking for? Well, if we're looking at this as the dealing range, then it can be healthy for price to have these kind of 50% retracements, all right? Now, just to show you what that's like, we can see in this leg here, this is the beginning part of the leg that swept liquidity, right? And then as we move this down here to this expansion leg lower, this is obviously a dealing range, right? So this is made up of a number of higher highs and higher lows. This is kind of the initiation phase here, but look how price came down and then retraced to this 50%, all right? Now, if we're using this for the whole leg down to here, then what this gave us the opportunity to do is, as we're coming down to balanced nature, this stopped us just shy here, right? So as prices come into this now, we're saying when it broke that level, that's when we really kind of re-obtained bullish market structure. So while we're in here, we have to remain patient at the moment, but I really am favoring this, all right, which is our bullish daily gap. And this starts around about 64,629, all right? Now, the reason for that is typically price moves in a way that it's hunting liquidity, all right? So it's moving from old highs, old lows, rebalancing gaps, and then continuing in that nature until that breaks, okay? So, for example, we have a gap here, price shifts in structure. Where does it revisit this bullish gap? Buyers step in the bullish gap, expansion. We leave another bullish gap here, but actually price action is moving too hot here, right? We set this order block and that then gives us our platform to then look for higher prices. Now, target this high up here, right? This one here, slightly higher than this. We see the initial rejection here, but again, look what happens. We come back down into this bullish gap. Price holds here. Now, the weakness in this reaction was quite telling, all right? So the way that price just could not displace or could not close above that high. And then, as I just said a moment ago, you know, broken record scenario, but if we look at this, we have our inversion gap. And that's what we say, you know, we're respecting these gaps until they break. When they break and we get a change in state of delivery, we then go from that gap. We then set this one here, which is a bearish gap. And then we deliver from that. And price is now starting to push down in a bearish sell model. So this to me looks like a good region for price to come down, all right? We're then in the lower 50% of the range, which we look at in terms of premium and discount, okay? So this one here shows us, okay, while price kind of purges down into this area, this then becomes a good area from a risk to reward perspective. So if there's any ICT students or anyone like that, he'll have this as a premium and discount range, you know, and you can just set this up with your Fibonacci so that this fills green and red, and it gives you a good indication of where you're kind of favoring these positions from. So to get long again, I'd really like to see price down in and around this area, take out this local low here, you know, maybe even hold this order block here as well, because we can wick down into this and recover it. We see a strong recovery down here. it'll give me an indication that price could be looking to regain its bullish structure. However, close below this, and then we have these, you know, this liquidity cluster down here. We highlight that, right? So these untapped lows. Now, while that doesn't look like a series of untapped lows here on the lower time frames, for example, we go on to the 4 hour, you can see swing low, swing low, swing low, swing low, swing low, swing low, all of them or most of them within a fair value gap. That will provide a really, really strong liquidity target. So for me, that's really, really quite clear. Now, kind of zooming out further onto this one, if we just pop on the weekly, and zoom ourselves right out, just forgive the daily annotations that are on there as well, right? This for me has really been a key level for Bitcoin. It's 69,000 flat on Femex. It will vary slightly from other exchanges. For example, I trade with Femex, so 69k flat on there. Now that was the all-time high that we set all the way back here in November 2021. Then when price kind of got to this level, there's an assumption that we really want to show strength above this. Any kind of rejection, as you can see here, the long upside wick, yeah, we get this was a bit of a sneaky move because we had this beautiful pin bar candle here. And then we had this bullish engulfing candle, meaning that the expectation then is we're seeking liquidity above here. But immediately we showed weakness, closed back below this. Then what do we say? If we see that failure, we see external liquidity taken, we look for internal liquidity in the form of our gaps. So this weekly gap here, so we were bearish down towards this, and then we got very bullish, especially after the close of this candle when we reacted here with an expectation that price was going to come up and start taking out some of these highs. Now, we never know exactly where price is going to reverse. It's purely a game of probabilities, right? And actually, price came in, failed to displace above this, but did then continue to move higher up. Now, price, again, if you look at this, it's almost like a point of control line. You can see the price action kind of sticking to this level. There's still not that conviction above it. I'm just not sure at the moment if I'm thinking about this outside of a purely technical perspective. If, you know, the institutions, the major buyers are due to step in now, are they really going to be buying this high up? And I'm not talking about people like Saylor, you know, who I know he can seem quite cavalier, but he does have a very long-term investment strategy for Bitcoin that's worked for him incredibly well. But you've got to remember when he's averaging in at places up here, it seems a bit mad, but he's been buying this, you know, so low for such a long time. However, I don't think that, you know, a lot of traditional investment groups, hedge funds, etc., are going to see Bitcoin as value up here. So there is that possibility that we need that purge lower, okay, before it becomes an attractive buying proposition. And one thing that kind of really stands out to me is if we look at this expansion leg higher here, yeah, or this kind of this impulse move, very, very fast up. Yes, we did come back down, we did test this, and we almost got back down into the 50%, but we have left these gaps here, these inefficiencies here as well. This gap here, which is around this order block area that wasn't retested, or this point of consolidation, we look for price in and around there. Now, I'm not saying that we'll come all the way down to kind of like the mid to low 40k region, but I do want to be aware and play this level by level, right? Meaning that if we start losing key levels here, if we start losing this, if this doesn't offer further support, I think the ideal scenario for the bulls here would be to see something like this, would be to see price kind of sell off, take out this low here, dip into this, and then see a really strong recovery. I think it would just be enough, considering this is a weekly scale, to get a lot of people bearish, all right, to change the sentiment in the market. They're the good time to strike, right? You want to be buying when the chart is red or when there's blood in the water, right? You don't want to be buying when it's green, because that's when everybody else is buying. And the chances are that what happens is people are buying in here, yeah, smart people, institutions, etc., experienced traders, and then price rips and lots of people sit on the sideline and think, can it keep going? Can it keep going? Then what happens is they're like, oh my God, this thing's going on forever. They start entering positions here, and the market just loves to liquidate those kind of people, especially if they're over leveraged. And I think that's the kind of move that we're seeing at the moment. However, you know, as we said, if we drop this down onto the 4 hour, I think the price action here on the 4 hour and the daily, and even on the weekly, right, is really, really clean. So it gives us some really, really key things that we can do. We can say to ourselves, while we continue to hold this level, yeah, what's the expectation for price to move higher? Well, what have we done? We've delivered here, right? We've come down and we've violated this. We've retested it and we've sold off again. Now, while we've taken external liquidity here, there's no internal liquidity for this to pull back from, apart from this very, very skinny order block here. So I would certainly be watching that area as a draw on liquidity should price recover. However, I do think now, you know, if we're looking to the downside, then the clear and obvious target, the first clear and obvious target is this one here, which is down at 65,153. Okay, so if anybody has any questions on that, please pop them in the chat and we'll look to cover those. I do just want to pop across here on to two things. One being the dollar index. So we saw this really, really strong resurgence in the dollar index. This is the dollar currency weighted as a basket against other currencies, but heavily weighted towards the euro. This resurgence that we see here, if we're looking at this, you know, typically when the dollar index is running bullish or running hot, it's normally a bad sign for risk. Not always the case, and certainly not something you want to hang your hat on. It does correlate and counter correlate, and you know, at some points it's very well correlated, other points it isn't at all, and you can check that. In fact, my good friend and colleague over at the Birdnest, your NLP coach, who's a brilliant trader and a world-class psychologist, we were discussing this in terms of that correlation. He's got a brilliant graph that shows how it just swings in and out. However, something I do really pay attention to here as well are the equity markets, right? Especially indices, right? I trade the NASDAQ, we trade the NASDAQ, all right, as well as ES. So that's NASDAQ and the S&P 500, but like on the mini contracts, all the micros. Now you have to forgive all the annotations on here. I know it can look a little bit messy, but actually what we can see is that this thing is just on an absolute tear. Now that's a good sign for risk. And the reason for that is heavily fueled by the fact that we've got, you know, the ECB have cut rates recently. So it's showing that inflation's coming down. The same thing is showing across, you know, the US, which is such a heavy influencer of the markets as well. So in that respect, you would feel like there would be a little bit of a resurgence for risk assets like cryptocurrency, which is another reason it makes me feel like that it's not necessarily the market conditions dictating that this isn't prosperous right now. It's, you know, it's that the price is just simply too high for people to consider it value, for major investors to consider it value. However, I could be completely wrong about that. We've seen that even though we've had all of this amazing progress here on the NASDAQ, we can see here, just I know this is only a 4-hour scale, we'll look at it on the daily as well, but how it's respecting these gaps, still respecting this gap here, right? This has been very, very efficient, the action up through here, right? But obviously we're new into the week. The key thing here is we want to see these areas, this down close candle here, you want to see that hold. As long as risk is looking good, and I base that heavily around the NASDAQ and the S&P 500, as well as kind of keeping an eye on the DXY, then the market conditions should be good for Bitcoin. So when price reaches that level that major players are, you know, accepting of it being a value bid, then it might well catch one. And when it does that, price can move incredibly quickly. Okay, so just worth kind of keeping an eye on that. If we zoom out a little bit more here on the NASDAQ, you can see really how bullish it's been. We took liquidity from down here. Again, broken record time, we inverted this fair value gap here and this one, caused a bullish gap here, leaving a balanced price range through the two. These are great areas of support. We can see we just tapped into the top of this order block, into the fair value gap, and then basically ripped a lot higher. Now, if these start to collapse lower, for example, my first line in the sand, if you like, for want of a better term, would be this gap here. Now, this should offer support. We can see we just kind of nibbled into it here. Should we close below this here, then this low, the remainder of this gap, and then this low become very real possibilities. And if that does happen, then you have to, or I certainly expect that to have a massive impact on crypto. Now, just going to kind of rip across onto our old friend ETH here. So zooming out, highest time frame. This was really, really simple for me. You can see this in the reports that we've been printing. Let's just get rid of these for a moment so it's a bit cleaner. Quite simply, we had this expansion move higher, took out this higher, taken external liquidity and left this huge bullish gap, all right? Now, expectation was for price to draw down to the 50% level at a minimum, excuse me, which it's done. And then we saw that kind of nice reaction get bought back up. So moving this now onto a daily, the expectation is, look, we've dipped down into the lower 50%. If we can see a good recovery here, then I think we can really look for a bit of a resurgence here in ETH. Let me just pull this back here because that has now been swept. Now we have a very, very small gap here, all right? And this is what I'm interested in at the moment. So this is our daily gap. Now we would need for this to be violated, so closed below on a daily scale, in which case I then do think the price is going to be seeking to rebalance this larger fair value gap here. And we can see on a daily, we've got another large gap here. So if we close below this daily gap here, this little skinny one, we violate it and I think we move lower. However, if we hold this, then I'd see that as a sign of strength. And actually we can see the long downside wicks purging into this area here, that we've got some absorption and price has now popped back above here. So this was our intermediate term low, which was our target from back up here, which is the simplest way to think about this as a low sat inside a fair value gap. Just makes a really, really good liquidity pool. So moving this down onto our 4 hour now. And remember, when we're looking at these, or when I'm looking at these, sorry, to get you into my mindset, this is a daily gap. A 4 hour close below this can be an indication of weakness, but we don't know that because the day can do this. Yeah, and you print the 4 hour candles and you've not gotten, but by the close of the day, on the daily, price has come back above and this is just a wick. Yeah, so that's where you need to be a little bit careful. However, we can see here on the 4 hour scale, again, broken record time for you, but we get our inversion so often of these. The signature that we see in price, we want to see a high swept. We see this high swept, the local high swept. We close below this here. And then ultimately, if you look at it here, where are you chasing down? Well, your next immediate point of liquidity. Now, this one is quite close, but we can see that we failed to take that out here on the close below. What do we get? Slight drawback here, okay? And then in London, we've had that lovely purge lower. Now, where does that leave us on ETH? Well, we're currently holding this gap. And actually, the ETH chart for me is pretty clean here. Just label this up. Okay, so our H4 FVG. So this is quite clean here, right? Now, again, if we're looking at this as kind of an expansion of why? Because we've taken liquidity from the lows and we've also taken liquidity from this high here, not quite from this one. But I would look at this and take our Fibonacci from the low to the high again and say, okay, actually price is kind of purged down here now, right? It's got a very, very small gap down here that we could look at. However, the other thing we want to be aware of here is that we've got this really nice inversion. So all of a sudden, I'm just going to move this to a less obtrusive range. Okay, so I'm just going to put this as a dotted line. All of a sudden, looking at this principle that price is taking external liquidity, seeking internal liquidity, right? It's now, and I'll draw this across a bit further so it stands out. We can see at our 0.5 level here, our price has driven down into this. Now we're finding support at this gap. We're also finding support here, right, at this fair value gap inversion. Again, bearish gap, expect it to offer resistance. It doesn't. When we close above it, what do? Look to take out the next point of liquidity, all right? Now, we didn't actually quite reach up for this, but we did create other swing highs, creating local liquidity, which can also be swept and led to reversals. So this area here at the moment is looking quite good for support. Now, I'm not saying that we're going to hold here or that we're going to necessarily moon, but if I'm looking at this, I'm saying, okay, well, what can I actually do here to give myself an actionable plan? Well, if we stay with our principles here, we're holding the 4 hour gap. I'm going to delete this one for a minute because remember, this is our bullish daily gap. You don't want to leave these on your charts if it's going to put you off. And if they do start to put you off, remember, the reason they shouldn't put you off is because this really, we're holding this until we close below it on a daily scale. So you don't know what, this price can come all the way down here and still recover it, all right, on a daily scale when you're on the lower time frame. So don't get lost on them. If you find yourself doing that and then looking at these gaps on your chart and going, oh God, this is resistance, remember, it's not. Either delete it or make them green so that when you see them in your head, you're like, no, this is still a bullish gap, all right? I prefer to have as little on the chart as possible. So for me, I just delete that there, but I'm very, very aware it's there. But again, it doesn't really mean tons to me until we're looking at this on a daily scale. So with everything we've just been discussing, if we look at it in this way here, and I'll do this just in red so it stands out. This is a bearish gap, right? If price is going to continue to deliver lower, then we've taken external liquidity here, which is also an intermediate term low. Remember that? A low that's within a fair value gap. Two great liquidity pools. We expect a reaction here. But we need to see a close above this on the hourly, which we have in about 34 minutes. As long as we hold this, as long as the body holds this, I don't care if it wicks all the way above, if the body's in here, then I expect the price to go lower. And we've got this really nice gap below us here. Now, remember, We also have some local liquidity here in the form of this low. The reason that I like that low as well is because it's still within this. Yeah, so remember what that's our inversion. We're expecting this to act as support, but again, remember it's a higher time frame. So price can purge down, can come below this, recover it, as long as it closes within it on its aligned time frame. That means if it's a 4-hour gap, you need a 4-hour close. If it's a daily gap, you need a daily close. But here on the hourly, what I quite like at the moment, as we look up here, we've got a lot of balanced price action. Right? This provides really good liquidity pool. Now, people, I think, probably got a little bit of a bearish sentiment. Obviously, you know, we've been seeing ETH kind of get a little bit kind of pummeled down here. Yeah, Friday, we kind of had this nice resurgence. We had a really nice one kind of midweek, and everyone was like, brilliant, this is going to the moon. Then, obviously, we hit this gap here, inverted this huge fair value gap here, and then purged liquidity lower. So, you know, still though, on an hourly scale, this is still pretty bullish. Yes, we've broken structure to the downside now, but again, we're holding this 50%. So while we've got liquidity targets above, and while people are now starting to feel bearish because we have this break in structure, the higher timeframes are kind of holding some levels. So if we close above this, I fancy price making a run on these highs. And if we drop to, say, a 15-minute chart, then we can really get some more context. Swing high, swing high, swing high, swing high, swing high. Sorry about the noise, guys. 1 second. Let me just go and close the window. They're having works done next door. Oh, sorry, summer's here in London, so while the sun's not out, there are builders absolutely everywhere. So look, the reason I dropped this onto a 15-minute is because you can see that the swing highs and the swing lows are more pronounced. When we're leaving all of these, you know, untapped high, untapped high, untapped high, untapped high, untapped high, that leaves a really, really good liquidity pool, the same way as we saw on the way up. Yeah, we see all these beautiful untapped lows starting to stack up, offering these amazing targets for price. We then get our inversion here, and price makes an aggressive move to clear them out. Now, I'm not saying that this would be a full recovery, but in terms of a day trade in here, intraday, then I think if we close above this on the hourly, I think we can start to make a move on these. If we get that close above on the hourly, what I would look for is for a low to be formed, that low to be swept. I'd be looking at this on something like a 5-minute chart. Then I would want to see this high here, the high that's responsible for the liquidity sweep, closed above, and I would want to see a strong move through that. I'd then like to see a fair value gap in this area here. Yeah, then you can look for price to retrace to here and go higher. All right, the idea is that you've purged liquidity from a low, right? So you've induced, again, trapping people this way because people have shorted into this. Then you have your structure shift here, right? When price shifts structure, you want to see that impulse move. You want to see, like, you know, you want to see buyers step in, for want of a better term, all right? You want to see buyers step in here. And when that happens, you very often see gaps are left in this move, all right? So you can then use those gaps to either fill positions. You've got clear invalidation below this low, so you can use that. You can either, when you close above it here, you could set it onto here, or you could set it at a specific level, 50% of this, for example. I used to like setting it on there, to be honest, being a little bit risk averse. And then you're obviously targeting higher prices up there, all right? So that's what I'm looking at on Bitcoin, certainly what I'm looking at here on ETH as well. But remember, you know, don't get too caught up on the higher time frame, the lower time frames here, sorry, and lose sight of the higher time frames. For me here, if we, you know, price is kind of purged off perfectly when we look at it, when we look at the outline plan that we had on Bitcoin. Similar here with ETH, but I do think we can get these recoveries. And again, if we want to be conservative here, we can just look at this displacement leg lower. Let me do that there. And then we can say, okay, we get that close above here, move on to the 5-minute, get a nice little intraday play up into here. And then, you know, as long as you get in at the right points, you can secure your risk when you get to these kind of areas, you know. And then again, you know, if you get good short setups from here, all of a sudden that's then a high probability area for price to step back into that bearish trend. Remembering all the time to keep an eye and respect our high time frames. Yes, and moving to the 4-hour here, we need to remember we've closed below that here. We've now purged liquidity. We're looking for a move up potentially here before a further move down. But if we get back above this here, yeah, this inversion, that would invalidate it for me. And then the swing high up here about 3,652 kind of area, it'd then be my key target. All right, guys. So look, we're going to put a pin in it there. I think spot on pretty much 30 minutes, which was nice. We're going to be back again on Wednesday. So we're going to be doing the show on Wednesday, which is our Alt Request Wednesday. We're going to look at any bits and pieces you guys want me to chart. We will do it live on the show. Do keep an eye on the economic calendar. Let me just get this loaded up for you guys as well. So always a good idea to keep an eye on this. Let me just show you before we go. Okay, so this is Red Folder News. You can use a site like Forex Factory or Baby Pips, something like that. Really, really good. It's all completely free. These are just key events that affect the market. You've probably all heard of FOMC, for example, but there's a lot of other things that go into it as well. Now, we're focused heavily on the US market here, all right? So today we can see here, US, we're not really concerning, but we've got Empire State Manufacturing Index, Red Folder News. We'll keep an eye on that. Tuesday, we can see US, we got core retail sales and retail sales. And then we skip through Wednesday. I think there's a holiday we're looking at in the States as well this week. And then we see that we got on Thursday, we've got unemployment claims. All right. This can have a big impact on the market. All right. It's all to do with looking at how the battle against inflation is going, right? You know, unemployment, CPI, PPI. Then you look at that. It's talking about the effect that this is having on the average people. Are a higher average of people in work, out of work? Are the jobs available? Is the cost of living putting too much of a crunch on people? Because when people don't have disposable income, then they typically move away from making riskier investments. All right. And then following this through here, we can see on Friday, we have our flash manufacturing PMI and flash servicing PMI here as well. All right, guys, look, just wish you a fantastic week ahead. Do trade safe. If you'd like to know anything more about me or the Bird Nest, or any of our wonderful partners like Femex, Bybit, Binance, for example, then you can find all the details down in the description. Lots of goodies you can sign up for and come and be part of a really, really cool education-focused community. For everybody that's on the live stream today, we'll obviously see you for our live trading session tomorrow, where we're trading the NASDAQ as well as cryptocurrencies. Caught some really nice trades last week, including on Ethereum. So yeah, do come and check that out. And for everybody else over at the Nest, I will be in and around all day. So I look forward to catching you over there. All right, guys, wishing you all a fantastic week ahead. I hope to see some of you here again on Wednesday. And until then,